From the floor of the CME Group, this is Danny Riley with today's MrTopStep update. You know what? This is a business, and particularly on this trading floor down here in the bond market and over here in the S&Ps, these traders rely on volume and volatility. Now, over the last couple of weeks, as the markets climbed higher and volumes dipped lower, so did the VIX. The VIX came down, made a low, and starting last Friday, after a little blip down in the crude oil market, it set off a big chain of events. And what we're going to do today is we're going to pull up a 6-day chart of the S&P and a 6-day chart of the crude oil market. Now, last Friday, the S&P made a high of 1343. And as of yesterday, the S&P got down to 1292.5. That's a 51 handle decline in basically 5 days. Okay, now on the flip side of this is the crude oil market. We all know that the supply and demands of crude oil have been a major factor. We know about margin calls and higher margins being placed on those contracts, both in the ICE and NYMEX. But you know what? When volatility jumps the way it did, people get crossed. You know, markets move up, people roll up their options, people roll down their options, and in between that, large losses are accumulated. Now, the crude oil market last Friday got down to a low of 89.30, and then 2 days ago made a high of 103.41. Now it's back down again. And again, this was a key component of this move in the stock market. And while we look at the S&Ps, we continue to kind of think that what's happened here is the market is going to take all this bad info and then make good of it. And that's kind of what's going on here in the S&P right now. The shorts are stuck again. The market's moving higher. We do have some statistics that say Monday's not a very good day, but we have to take in mind that last Monday was a shortened week. We didn't have any Friday-Monday effect. We had the Friday-Tuesday effect, and obviously that wasn't a very good effect. But in the long run here, we still believe that the mutual funds are going to be buying stock on these declines. And what happens over here in the S&Ps is you get a bunch of people hedging their long positions and outright selling the S&P. Now the markets are back up. Everything is kind of calmed down here. Now, we're not saying that this is the end of everything, but what we do think is that there is too much emphasis put on the downside. People calling for 900 in the S&P. You know, this POMO's not over yet, and the PPT is going to be here, and we think that they're holding up the market as we move forward on any decline up into, you know, going into June or the end of May. So bottom line here, everybody's stuck a little short, and the SPUs are going back up. We'll be back on Monday with another MrTopStep update.